Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday evening, October 14th, 2020, 6:50 p.m. Central Time. To me, the event of the day was finally, Mr. Mnuchin, our Treasury Secretary, said they're very far between he and Ms. Pelosi, and the odds are they're not going to get a deal done before the election. Maybe they can get something done with the money that's already committed to programs that haven't been spent, but forget everything else. Honesty's the best policy. We've known that Ms. Pelosi won't do anything to help the president in front of the election. That's not in her best interest. Let's leave it at that. Doesn't mean that she's right or wrong, but that's her. I want to make that clear. Her best interest. So as we look at the markets, they sold off today when they saw that news. Okay. But the market's really known that news. So all it did is come out to the forefront. The market will trade on something else starting now. When we look at the energies, we got a little bit of a friendly news. If you looked at the API numbers tonight, I'll be covering it in my written updates for my people tonight. Bonds and notes, they got up high enough, they should run out of momentum. I'll show you why in a minute here. And as we're going back and forth in the currency markets, there's just so many unknowns. People are wondering what next. Well, I think you have to take off in front of the election a COVID relief bill. That's what I would assume. If there is one that comes about, it'll be a bullish surprise and be a kicker for the market. But I think you take it off the table. We've been talking about it, and I think you deal with that reality of the market for the moment. When we look at the S&P, we are still up about 11 points for the week. The market is back under this 3504.50. We got over it briefly on a close, but couldn't stay up there. And remember, that's a weekly chart. We've had a breakout through here of an inverted head and shoulder, call that the neckline, and the market broke over it. Now the question is, and I pointed this out to you yesterday, this is a resistance point. If the market can clear there, I wouldn't be surprised if we get up to the 3600 to 3650 zone. But this first run at it, and you're about 50 points away from this number right through here, 3575, that's the resistance on the chart. When you look at the Swingline Study, it's bullish. You're still in a pattern of higher lows and higher highs. This is the most current swingline low right back here. That's what you'd have to take out to break the current pattern on the chart. The 18-day average, as I showed you yesterday, it was going to be climbing. It was going to be climbing over this low, and it's doing it. 1, 2, 3. Now you're up to 33.81. So this market can afford to fall there and still keep the swing line bullish, but it would hurt other elements in the market. In terms of the Bollinger Band, you got up to it, stayed there for about 2 days, 3 days, and have been breaking back. Okay, but it still leaves that market as your resistance point at 35.55.5. When I look at momentum, it is still embedded. Now, by the skin of its hairy-haired teeth, you've got an 82.36. You want to see this turn and go flat again. The market is still, I think, being bought by the pros. They'll get out if they lose the embedded reading. That doesn't mean they'll turn bearish, but this could be a break that goes another 80 points on them. They won't stand for that. But if you don't get these numbers under 80, and you start turning this back up, watch out. You can see the red is under the blue. You want to get it the other direction. In the NASDAQ, it's the same thing. And you're just over the 80 level. Close under it, and it's only, folks, not even 7 o'clock yet. You got to get tomorrow to 5 o'clock. We don't know where it'll be. You got to close under 80 to get me nervous by a bit, not just by 79.9. Got it? It's got to close under it with some momentum. Other than that, I think the pros are in there buying this market. I think they bought the Dow today, the same thing. Is the market going to be able to hang on? We don't know, but it'll be determined. By the time we wake up, we'll have a better idea, I think. And in the Russell, this is still the strongest looking of everything. As you can see, it's not even close to losing its embedded reading. Doesn't mean it won't, but it's not. And the resistance is all the way up here. So far, we've had a setback. The momentum's in question for the early evening trade, but it's early evening trade. In terms of the VIX cash, all I was looking for was a move back to the 18-day average, right there. I haven't changed my opinion. The trend is down. The market's correcting an oversold condition and out of it. Both numbers are now, show you this, both numbers are no longer under, one of them under 20 anywhere. You're out of that. So now the question is, what next in the market? Right now the bears have control of this, which is bullish, the stock indices. In the bonds and notes, all I was looking for from this whole area, when you took out the outside day down, was for the market to get back to the 18-day average of closes. Tell me what it did. I feel good with that. Same thing in the 10-year. Yay, Ira. Good call. And all because you took out this. Now, the first objective was really the 100-day here. You hit it yesterday. This just put the gravy on it, but that's a lot of resistance. This market has to do some more work. What's going to scare it to get a bid into bonds and notes? I don't know. But also what you took off the table is, without a COVID relief package right now, what's there to drive interest rates higher? Because you're not going to get that financial help from a fiscal government at this point in time. That may happen after the first of the year, and it may not, after the election rather, and it may not. What if President Trump wins, and what if the Republicans hold on to the Senate? These are close races. Are we back to where we're at right now? We'll find out, won't we? In the dollar index, if you rally, I look for resistance at the 18-day average. The trend is down, but you're very oversold. That is not an area, when you get down that low, that I think bears defend their position. So I'd be a little cautious there. And you've got the flip-flop of that right here. Now, if you're watching momentum, you're no longer overbought. Watch. Numbers over 70 are overbought, and you were there. You've now lost it. But momentum, if we take a look, hasn't turned up either. It's still dropping on us. So I think that while the 18-day average is holding, I don't think anybody's rushing to these markets, putting on a lot of new positions. In the Japanese yen, we've had a nice rally take place. Can it make it up to the Bollinger Band's the question. You're already overbought. Support is back in this market at the 94.86, but being that overbought, I don't think it'll be well supported. Bitcoin, all it did is pull to the right-hand side in the Bollinger Bands as we talked. The market only stays outside of these bands 5% of the time. You do not go short when they're over them, but if you're looking to buy, you're not buying over them either. There's a whole way to use them, and I teach it in my charting course. The differential between Brent and WTI is favoring for the moment the Brent oil climbing. Now, OPEC has begun another meeting right now where they're deciding what to do with, do they keep cutting production? Do they keep it where it's at? I think for the time being, their own report showed that they can't afford to put more oil back on the market. And they don't think the U.S., from everything I've been reading on reports, is going to get back anywhere near this production that we just left. The financial part of that market is hurt. So you're not going to get easy financing to increase a lot of shale production. Occidental Petroleum put a big report out on that today. When we take a look at Brent, you're still in an uptrend, but you're very overbought. What are you doing? You need to get a piece of news that says supply's coming off the market and or demand's coming back. Let's talk about demand. France tonight declared a state of emergency. All the major cities in France, starting Saturday, 9 p.m. curfew to 6 in the morning. The UK may lock down as early as this weekend. In the United States, Wisconsin's pretty much out of control. Indiana's now another one. If you drive into Illinois, you see all the signs on our highways that remind you have to go in the 14-day quarantine if you travel to either of our neighboring states. I'm not saying people do it, but I am saying that employers can't tell people, hey, if you live right over the state border, come into Illinois and go to work. That isn't happening. So when we look at all this and we see that 2 of the drug treatments, which we'd expect, have been halted as they try to figure out why people got sick, we learn that the fragility of trying to get this vaccine right away just isn't there. So in order to get oil prices higher, I think they need to cut production in some manner. When we look at the WTI crude, You've got a lower low, higher high pattern. When you look at Brent, you're still in an uptrend, resistance 44.13. When we look at heating oil, the trend is up in an overbought market. I like heating oil because it's going to get colder. We in Chicago have been in the 70s. Tomorrow our high will be 55 with our lows back into the 30s. So in other words, this brief spat of warmth that we had, which I took advantage of to do a lot of things around the house outside, it's about to go away. The reality is going to start coming in. Nat gas fell pretty hard from this 332 all the way down to 313, found its footing against the 18-day average. The trend is up unless you take out 313.20. Now the seasonals for the next week or so are strongly to the downside. So any move under there may well trigger a sell signal because you then have lower high, lower low, and it could put into play the let's call it 301 to 297 level. I talk about that and a lot more in my morning futures video. And as these videos go on, I keep thinking maybe I should add a few more things to them. I might do more on seasonals for people. There's things I'm doing there. But the purpose of my 5:40 in the morning videotaping is to give you ideas what I'm seeing so you can bounce them off yourself. Now, right now we say shorter term and swing. I got to change that. I put out the long-term trades, the trades that last for weeks, off the weekly charts on Saturdays for you. So I'm going to change that. It's not quite the right thing on our ad. People wanted longer-term trades. We added it, and I get comments on it. They love it. They like what they're seeing on there. I cover each of these videos on the daily basis with all this, and then on the weekend, I cover them all on just weekly charts to give you the bigger perspective. And the idea there is to catch the ideas of the trade. Remember, we're futures people. Futures people are in and out more by nature, but when you go to the weekly charts, you can hold on for those longer term. Longer term could also have bigger risk. You have to understand the game as you trade it. If you haven't tried this, it's, what the heck, it's $7.95 for 30 days. You go out and get private coffee. I use Starbucks, but other people could do other brands. Buy a big one. You're about $7.95 with your tip, right? 30 days of this. And it's really a lot because you get on the weekend my video plus 5 during the week. So it's 6 out of 7 days you're getting information. All you need to do is go to our website. Under the keyword research, you can sign up for everything you want there. You can call our staff. They can get you signed up as well. I think you'll find it easy. We're improving the website where you'll be able to make your own changes to your credit cards and so on it. That's all coming as we finish up the last quarter of the year now. So as the service has exploded for us, we just keep adding more features. I'm Ira. You have a great day. I hope to see you sign up for this. I'll talk to you tomorrow.